Throughout your trading journey, you're going to experience many things that you don't want to experience. You're going to experience painful losses, drawdown, the loss of funded accounts, challenge and criticism from other people in your journey. And having a resilient mindset is important in order to bounce back and not let these things affect you. So what I'm going to do in today's video is I'm going to share with you some principles, some mindset principles that will help you develop a resilient mindset, so that when the inevitable drawdowns or losses or criticism come your way, you know exactly how to deal with them and you can continue on your journey and achieve and sustain consistent profitability. So let's get into it. Now, when we talk about building resilience with your trading and being resilient in the face of losses and drawdown, the one concept I would love to start by sharing is this idea of whenever you take a particular stance, or you can also exchange or change the word stance for expectation. Whenever you have an idea and you have a certain belief and an expectation and you're holding on to a particular stance of what you believe, you then become a victim of circumstance. And the truth is, if you have a look at the market, and if we were all to just unemotionally observe the market and the price movement in the market just moves. It moves in certain ebbs and flows, it moves in certain patterns, but the market just moves. And this is calculated over price over time. There's a certain price over a certain time. And the data itself is not biased, it's unemotional, it's objective. It's a certain price over a certain time. Now, we only label price movement good when we have a certain stance and we're maybe looking here in time and we're predicting that price is going to go up, and we have this stance that price is going to go up, we have this expectation that price is going to go up, and then price does go up. And in that circumstance, we label the price movement good, and it makes us feel good, and we label it a positive price movement. Now, we can also hold a stance up here in time, and in this situation, maybe we're predicting and we have a stance that price is going to continue to go up, and we continue to buy, but then price moves downwards. Now in this situation, we're going to label price action bad, and maybe we're going to say we got stop hunted in this particular situation. The market makers are after me and they're stop hunting me again. And in this situation, we're going to label what is objective price movement as bad. Now, the only reason we have become a victim to this particular circumstance of price moving down is because we took a stance in this particular situation and we said that price is going to go up. That was our expectation. Now, at the moment of taking stances, we are not resilient because we have a particular expectation, and how we feel is then put in the hands of the market. If the market goes in favor of our expectation, we feel good, we feel elated, we feel positive, we feel happy. And if the market goes against our expectation, we feel sad, we feel depressed, we feel like something is wrong. So in those particular situations, when we have a stance, we are not resilient. We are dependent on a certain market move in favor of what we've set. So the way you develop a resilient trading mindset is by not setting a stance, by not setting expectations, by not taking a stance. Now there's a difference. This scenario that I just outlined is what I call outcome-based thinking. You have a certain expectation on the outcome of a trade, and you're taking trades because you think price is going to go in a certain direction, or you're hoping it is, or you have an expectation it will. We can also make decisions, and for example, in this particular situation, we can make a decision out of what I call process-based thinking. And the way that would look is, all right, in this particular situation, the market is providing certain factors that align with my trading plan, and my trading plan says that 1, 2, and 3 factors are present in that moment and it's at a key level. And in that particular situation, because my trading plan states that this aligns with my trading plan, I'm going to take the trade with no expectation on the outcome of this individual trade. This individual trade could go up, it could go down, because there are millions of factors influencing price. Who am I to think that I can predict the outcome of this trade? But I'm still going to take it because my trading plan states that if I trade this particular scenario over a large sample space, 100 trades, I'm going to end up profitable. That's a very different mindset. And then you don't have a particular stance on this individual trade, but you know you're going to be profitable over the larger sample space. So the market can go up, the market can go down. And in both scenarios, you're resilient because you don't have an expectation otherwise. You're not taking a stance. And you know how I mentioned before that price just moves in the market up and down over price over time. What you do is you then are able to trade the market as if you were just the observer in the market. And that's really the perspective you want to have. You want to have this curiosity observer mindset even when you have money on the line as a trader. Okay? And the way you do that is by not taking a particular stance or an expectation. Now, I have a free tool called the Bulletproof Your Mindset tool, which will help you get rid of your stances, get rid of your expectations on the outcome. That means that your sole focus will be on the process. Does this trade align with my trading plan or not? So the first actionable insight is download the Bulletproof Your Mindset tool. It's a free tool in the description. And that tool, again, is going to help you identify what is my stance, what are my expectations at this particular time, just before I'm about to enter. And the tool is going to get you to write all those down. And then the tool is also going to take you through a grounding process to ground those expectations and to align you with your trading plan so that you're taking trades not out of outcome-based thinking, not with stances or expectations, but it's going to help you ground all of those so that you're in process-based thinking. You're only taking trades that align with your trading plan, and irrespective of which way the market moves, your emotional state isn't tied up in the direction of the market, and you're free from that, and you can just execute your trading plan. Okay, so that's number one. That's the first way you build a resilient trading mindset, by not taking stances in the market. There are multiple other ways to build a resilient trading mindset, and a lot of traders have so much tied up emotionally, mentally, financially tied up in the outcome of one individual trade. And the truth is, when you go and determine your edge, you're going to have a sample space of trades. Maybe this is a year's worth of data, 1 year. And over that 1 year of data, you're going to have a series of wins and losses. And there may be a string of wins, there may be a string of losses. And you know that the wins you experience are going to be close to on average, a win of, say, for example, 3%, and your losses are going to be 1%. So although you're going to have a string of wins and losses, and your strike rate may be below 50%, you know that your risk to reward is positive. Therefore, even with a strike rate of 50%, you're still going to end up over that larger sample space profitable. So each of these losses is -1, each of these wins is +3. So let's just guess here, 12, 15, 18, 21, 24, 27, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So at the end of this sample space here, right, maybe not a year, but whatever it is, you end up with, I forgot the numbers, but let's say 17%, whatever it was, okay? And that's good. You know, at the end of the sample space, you've got a profitable edge, which is great. And you may have more trades across this sample space in a year, but I'm just painting a picture here. Now, if on each individual trade, you get so emotionally tied up and you get so emotionally invested in that one trade being a win, then what's going to happen is you're going to lose your resilience because you're expecting something, you've got a stance, and you've tied up so much of your day and your emotional energy into this one trade being a win. And maybe you're not doing anything else with your life. You've got 7 areas to your life, but you're maybe just all you're focused on is your trading, just that one area. And you don't want to do anything else with your life. And all you're doing is sitting at the charts, watching that trade. And if it plays out, you feel really good. If it doesn't, you beat yourself up because you're so hyper-focused on that one trade and just trading. That's it. And what traders do is they broaden their focus and they don't think about the larger sample space. They just think about that one individual trade. So if that trade is a win, they feel really, really good. And if that trade's a loss, they feel really, really bad. And in that state, you have no resilience, okay? Because if it plays out in your favor, you're good. If it doesn't, you're depressed. And that impacts the way you feel. That impacts the way you trade the next day. That impacts the way you interact with other people, your mood, all that type of stuff. So as well as not setting a stance, I encourage you, the next action step here is to broaden your perspective. Instead of thinking about the outcome of just one trade, put that in context of the larger sample space, 100 trades. Because like I've mentioned, that one win here, the 3%, may be compensating for future losses, or it may be, compensating for past losses. Okay? So to get elated by that one win, what you're doing is that you're, taking that out of perspective, because that one win, you may have another few losses before you take another win, before you get your monthly or yearly average. So that one win may be taking up for future losses or past losses or future losses that then determines your monthly average. So to get so elated by one win is taking you out of perspective. And to get so depressed by one loss, that one loss may be taking care of past wins or future wins to give you your yearly average. To get so depressed by one loss is too broad or too narrow thinking. You're thinking about too small of a sample space. So I encourage you to always consider the larger sample space and to broaden your perspective. Realize that this one win or loss isn't the end. It's part of the larger sample space. And remind yourself of your edge. And then on top of that, the final action step is to, and that's, by the way, that's going to help you build more resilience. So because you're not so tied up in that one individual trade, you don't really care about the outcome of that one individual trade. You're more focused on the larger sample space now. And the third action step here is to do other things, have a more holistic approach to life. Put more time into your relationships and family. Put more time into your health and fitness. Go to the gym. Put more time into developing yourself mentally. Read more books or study more content. Go off and focus on another part of your work or another job or another business you'd love to do. Study personal finance. Develop and empower yourself financially with your personal finance. Or put more time and study into developing another trading strategy or refining your current strategy. But do other things, and that way you're not so emotionally tied up in that one outcome of that trade. You just take the trade and you go off and do other things. You have other things to do that day that are still as important as your trading. And what that helps is it helps dampen any wins or any losses emotionally, because you're more diversified with your energy throughout the day. So those are the 3 action steps. Get rid of the stances, get rid of the expectations, broaden your perspective, think in terms of a larger sample space, and do other things. Have goals in the other areas of life for the next 3 months. Identify the action steps and focus on doing those also. Okay, check out the link in the description. We've got the free tools and free resources that will help with your trading. If you have any questions, let me know in the comments. But thank you for watching to the end. If you found this useful, please like, comment, and subscribe, and share these videos with your trading communities and trading friends. I look forward to seeing you all in the next video.